Hi, my name is Phil Hoskins, Managing Director of Evolution Energy Minerals. We are developing the Chilalo Graphite Project in Tanzania. It's a high-grade coarse flake graphite project, advanced, development ready, and pushing it towards FID in the coming months. We're also looking at some very exciting downstream opportunities as well for future growth and doing all these things sustainably in an ESG-friendly manner.
Phil.
So yeah, thanks, Dave.
Well, you can see, Phil. I think I saw you in much nicer surroundings last time down in Cape Town. It's part of the one-to-one and in Darba down there. So welcome back on the show. Just want to you've done a lot since I last saw you, so we've got a lot to kind of get through. We'll state the obvious. Graphite. Not a lot of people understand the sector, the nuances of it, the opaqueness of it. We're going to try and help people with that today. So since I last saw you, you've raised some money, $13 million. Why $13 million? And give me the terms that you raised that under.
Yeah, sure. We raised $13 million at 32 cents. We're really pleased to have, you might recall, our cornerstone investor or shareholders, the Arch Sustainable Resources Fund. So they cornered that for 25% of the raising. We never want to raise funds if we don't have a value-added reason for raising them. And so it was for a specific reason. We wanted to be funded through to the completion of FID of the Chilalo mine. Whilst we don't need to add mine life, given it's an 18-year life, we do want to do a bit of exploratory drilling to drill out some of the 30-plus kilometres of conductors and really demonstrate the scale potential to become a multi-decade mine. And we also wanted to, in light of some of the excellent results we've been getting in our downstream test work to produce coated spherical graphite for the battery anode materials, we really wanted to advance test work, qualifications and feasibility studies on that to try to bring that alongside the mine or at least soon thereafter.
Okay, so you raised that 32 cents, which is at or around where you are currently. Most companies like to put out the DFS and then start to raise money because hopefully there's a bump there. You're saying it was important now to allow you to move forward. One of the things that surprised me there that you said, given you've got 18-year life of mine now, why bother with the exploration component? Have you got an eye on needing to raise project finance once the FID is complete?
Yeah, so there's a number of reasons for the exploration drilling. I guess it's a nice to have rather than a must have for the financing. But I think if people were to benchmark our project against other projects, one number that does stand out is that the operating costs on a life of mine basis, principally down to the mining, look a little bit higher. And that's because the 18-year mine life goes down to 180 metres in depth. Now, given the amount of graphite at surface, there's absolutely no reason probably to go below 60 metres. And so clearly, yeah, strip ratios and costs look a lot higher. So we wanted to, I guess as part of the financing, demonstrate that there is oodles of near surface high-grade graphite there, and we're very confident in doing that. The drill rig's going to mobilise in September. But probably the more strategic reason for off-takers and for financiers is to know that this thing's going to be a mine in southeast Tanzania for 50 years. We've got the graphite there to be able to double and triple production into a growing market that we know is coming. So there's numerous reasons, and it's going to impact the economics ultimately when we can fold those into updated resources and reserves as well.
Okay, so I want to start really basic here because I think it's important that we kind of get into product qualification, offtakes, and so forth in a second. But you, like the rest of the market, being hit hard. I think you guys are, whatever you, 50, 55 million market cap, yet high grade course, it seems to be what people are looking for. Investors, however, don't understand the potential. So I know the DFS is coming out, but can you give us a sense of the size of the prize? What is the opportunity ahead of you? Where are you in terms of cost, margin, revenue, and turnover?
Yeah, sure. So as one of the coarse flake deposits in the world, I guess investors need to understand that coarse flake drives higher prices. And we're talking significantly higher prices for coarse flake graphite than fines. Whilst the fines price is going gangbusters at the moment, it's up to an incredible $900 a tonne. The coarse flake graphite can sell for $3,500 a tonne. And so it's almost in a different product category altogether. And so because we've got very high proportions of the coarse flake graphite, it is always going to drive us being a very high margin project. And I mentioned off air, Northern Graphite have just bought the Emrys Lac des Îles mine in Canada. They've just published some pricing. So we now have open for all to go and see the sorts of pricing that can be achieved from some slightly coarser flake product and decent product. So what's all that going to mean? I'm expecting we're going to, with the rising graphite prices, even in an inflationary environment that we're in, I believe our margins are going to be greater than they were in the DFS. The graphite prices are up at least 20% over and above where they were in the DFS. Our capital costs might be slightly higher, but those economics in the DFS were was a US 320 mil NPV, which is close to $500 million Australian dollar NPV. And I think outside of just the mine, the value of some of these downstream opportunities, given how well the graphite's performed in lithium-ion batteries, coated spherical graphite, I think companies that have demonstrated having a vertical integrated part of their business are trading at many multiples of just the mine developers. So yeah, we've got all of that in our arsenal, and very confident we can demonstrate that value to the market as we move forward.
I know, but what people are going to be looking, we're talking about an updated DFS, right? What people are going to be looking to is seeing how you've been affected, because by in inflationary costs, supply chain issues, rising costs across the board, whether it be people, fuel, whatever it is, the equipment that you need to bring in, because some companies are saying that the previous studies, the capex has been blown out of the water, right? It's a new environment that we're in right now. So I'm trying to get a sense of the size of this project. First of all, that's important for me. Number one, my margin's great, but if 18 years at what pace, what scale, what dollar numbers, and that gives me a sort of sense of where you compete with other metals or commodities that I understand. So can you just help me understand that?
Yeah, and keep in mind we're 6 weeks away from the updated DFS, so some of these numbers could be guesstimates, but our capex is going to be in the order of 100 million US. I think our previous DFS was 87, and the previous DFS was Q1 2020. So there was probably a year post 2020 with COVID where there wasn't much inflation. The last sort of 15 to 18 months we have seen inflation. So we're expecting $100 to low $100 million capex. In terms of OPEX, we were previously around $750 US, and I think our sales price was around $1,500 US. So it was around a $750 a tonne margin. My expectation is that sales price will be north of $1,850, and so that's at least a 20% increase. And I don't think capex will have gone up 20%. So overall, the economics should be improved, margin should be improved. And in terms of the scale of the project we're looking to build, it's roughly on average 50,000 tonnes per annum of flake graphite concentrate being produced. So
okay, that gives us a sense of the numbers. Now we kind of need to move into the area where, because I mentioned earlier, project financing. That'll be, once you've got the updated PFS and you've kind of gone through the FID process, you're going to need to raise that $100 million and maybe a little bit more to give you a bit of breathing room. So to do that, you're going to need to start to have conversations with groups for sure. What do they need to see from you? Is it a simple case of the updated DFS, or is there more to it?
Yeah, there's more to it. I think when we last caught up in Cape Town, we were sounding out a lot of the banks and financiers that we think will be interested in this project. That's moved on to the provision of a preliminary information memorandum, giving those banks and financial institutions a lot of information about the project. Albeit that the numbers aren't going to be finalised until mid-October, we can at least ascertain what are some of the risks as they're looking at them, whether it be Chinese offtake, whether that be Tanzanian regulatory issues, and these sorts of things, or the graphite market more generally. So we know what the issues are that they're going to want to work through and get comfortable with. But what else do they want to see? So from that Tanzanian regulatory piece, they're going to want to see the framework agreement with the Tanzanian government. We had a Zoom call with the special presidential government negotiating team a couple of weeks ago. The finishing touches are being put on that agreement. We're expecting it then to go to the Attorney General, and we're expecting during probably later in September to get invited for a presidential signing ceremony of that framework agreement. So that's been 5 years in the making, but it's the critical de-risking element from a regulatory point of view that the financiers are going to want to see. And after that, the updated DFS will provide the numbers, and that's obviously going to get fed into models around the ability to service certain levels of debt. We've got an independent technical engineer that will be lined up to come in after that for about a month and review all of the technical information on behalf of the financiers. And then probably towards the end of this year, early next year, we'll be selecting mandating a lead manager to run the financing and finishing off the due diligence.
I mean, from my days in banking, that kind of technical analysis was fairly superficial in the sense you bring a consultant in who would kind of give it the once over and say, yeah, broadly this is fine. Where we put a lot of store of value was offtake agreements from industry players because they know a lot more. I know last time we talked, you had one offtake agreement in place. Are you looking to do more? Because you talked about product qualification and the fact that you were looking to perhaps have 20 plus customers, vying for your product. So again, where are you with that?
Yeah, you might recall I've spent almost 250 days in China, 30 plus trips. There's been a real commitment from our company to understand the market and introduce our product to those end users. So that qualification and test work process has been ongoing since 2015. So we have, I guess you could call it pre-qualified our graphite with, it's probably 20 in China, 15 to 20 in Europe, and again in the US. So our customer database is extreme. In terms of what do the financiers need to see from that sort of offtake, that you mentioned the cornerstone offtake that we have signed with our coarse flake products is sort of the dream of who you would want to sign with. If you have coarse flake graphite, firstly you would want to test does it work in value-added applications like expandable graphite and graphite foil, and that's happened numerous occasions over the last 6-7 years. But then once you've discovered that, then you would want to deal with the global leader, and that's YXGC, the offtake that we have signed with. Expandable and foil are probably a little bit lesser known markets, even to a very sophisticated bank than, say, the lithium-ion battery market. And so those banks are going to have to do their due diligence, and might involve a site visit to China. It might involve getting independent people to come in and make an assessment of YXGC's standing within that industry, which I think is very difficult for anyone to hold a candle to. They are the global leader and viewed that way by everyone in the industry. So I think that offtake agreement gives a lot of confidence. I think I might have spoken last time about the fine flake offtake agreement, and certainly negotiations have advanced with numerous parties in regard to that. We haven't made an ultimate decision on this just yet, but given the performance of our fines in the coated spherical graphite that I mentioned before, and it's pretty much performing as good as it gets in those anode uses, that we sort of don't want to contract away, sort of strategically for evolution, we don't want to contract away our fines for 3 years and lose that strategic leverage into the downstream market. And so financiers, whilst we are talking to numerous off-takers, whilst financiers, if they demand we sign one for the fines, then I guess we'll have to. But if we can get away giving them comfort in our ability to sell those fines to numerous different customers without signing an offtake agreement pre-construction, that would definitely be our preference.
I mean, in the same way that banks need to mitigate their risk, right, by asking you to do something like that, or possibly wanting to mitigate jurisdictional risk, which is very prevalent. Who thought we'd have a war in Europe again anytime soon, right? So jurisdictional risk is really kind of raised the bar, as it were, to risk mitigation. You must be looking at the markets and saying, well, yeah, China's the obvious place to go. They're the leader in all of this. But you've got countries like the US, their critical minerals list has become meaningful. It used to be, vaguely, roughly talked about because there was always a way to access metals in the market through traders, etc. Right now, they're trying to create an ecosystem which is something that they can control, something that they can work with friendly countries and friendly companies. And we've seen sanctions being imposed, which we wouldn't have imagined before, affecting supply chains all around the world. So you need to have some degree of risk mitigation and risk mitigation strategy in terms of where you sell your product, who you sell your product to, don't you?
Right. Absolutely. Geographical diversification is a very important part of our overall sales strategy. While 70% of the revenue is coming from one off-taker and they are Chinese, I think whilst the US and all of these economies are desperately trying to reclaim and gain access to these critical minerals, you can't go back on decades of outsourcing manufacturing to China. The expandable and expanded graphite market is 90% dominated by the Chinese. And whilst there are customers in the Western markets that I intend to sell some coarse flake graphite to, you just wouldn't be able to move that quantity into that end use. And so YXGC, I'm very proud to be dealing with them. In terms of the fines and the anode materials, you're absolutely right that the US and many jurisdictions as well, it's not just the US, but establishing those ex-China supply chains is a huge thing for them at the moment. They haven't put anywhere near as much effort and funding and attention to it that's been required over the last decade. But the desperation stakes have definitely jumped up a notch, and the funding that's around the establishment of these critical minerals funds, they're everywhere. There's an Australian fund, the US government, US Department of Energy gave a $102 million debt facility to Syra Resources to help fund the establishment of a downstream coated spherical facility in Louisiana. That's the beginning of it's the desperation stakes of all of these places. So no, don't take by the fact that our cornerstone offtake is Chinese as being a desire by the company to just sell everything to one jurisdiction. We need to manage our risk and diversify for sure.
Right. And so how long is that? Just remind me about the offtake agreement. Is that for a specific, you told us the percentage, but is it for a specific term and a specific price and that you get to renegotiate somewhere down the line?
Yeah, it's a three-year offtake agreement. It's 30,000 tonnes, so it's 56% of our production. But because it's the higher value coarser flake products, it's a little bit over 70% of the concentrate revenue. Of course, if they're a good customer over that period, then my intention would be to continue to sell to them thereafter and sign another agreement. In terms of how pricing works, we set the price for each of the products sold in that agreement once a quarter, agreed between buyer and seller, agreed at least a month prior to the beginning of each quarter. And if there's a disagreement on price, we appoint an independent consultant to come in and arbitrate that. If we disagree on who that arbitrator is, then my Chinese consultant that introduced the deal would be the mediator. And she's trusted by YXGC as well. So I think this is as close outside of the fines market that I think we will start to see some reliance on, particularly people like Fast Markets, some of the reputable Western price trackers and those sorts of things. I feel that this negotiation between buyer and seller is here to stay in graphite for some time.
Yeah, I hope so. Hopefully it removes the kind of opaque nature. We've seen it in cobalt as well. It makes it difficult for people to value companies and very difficult to actually say, well, is this price, we get that it's high now, but is it sustainable? Where is the future demand coming from? So we'll keep an eye on that. With regards to, again, helping me understand how I get comfortable with this, it's not like I think you can put out a gold equivalent number here. So I need to sort of see who else is playing in the space. We know Syrah, you've kind of got Northern Graphite, I think, as well as players, but are there lots of new entrants coming in here? Would that be a positive sign, or is it still just a very difficult technical commodity to get involved with? In which case, makes your position defensible, right?
Yeah, in terms of the listed company exposure to producing assets, it's very limited because we sort of touched on it before with the Chinese domination of certain commodities. But of all the battery metals, graphite is the commodity that China has the biggest stranglehold over. Between 70 and 80% of the raw material supply, 100% of the downstream processing, the purification and spheronization is done in China. So unfortunately, there's not a hell of a lot of publicly available information on those companies and how much money they're making and those sorts of things. But yeah, you've got Sire Resources in Mozambique. You've got a UK listed company, Tirupati, in Madagascar. You've now got Northern, who's bought the established mine in Canada, which has a very short mine life to come. But the new wave of graphite supply to come will come from developers. There's a number of listed developers. I believe East African graphite is the highest quality in the world, and in particular Tanzanian graphite, the flake size and the ability to purify it if you wanted to, up to plus 99% through flotation. I think just demonstrates how quality the graphite is in Tanzania, and ours is exceptional within that as well. So that's where the new waves are coming from, and there's no one that denies that there are numerous mines that need to come online. I think Benchmark Mineral Intelligence are talking about a 650,000 tonne shortfall by 2025. If we're not making investment decisions in the next 12 months on that's 13 new mines the size of our mine. So if we're not making investment decisions very quickly, this graphite price is going to continue to surge. And as I mentioned before, $900 a tonne for fine flake graphite trading in Heilongjiang today. It was $500 a tonne 9 months ago. And I don't think, whilst we're right in the peak season of mining in China right now, it's the summer, and once we get to the end of October and we start to get into winter, that production's going to slow right down again. And so whilst prices might be abated a little bit for now, I'm expecting them to surge again unless we're fundamentally changing the supply-demand imbalance.
Right. So you feel that the price is sustainable. If not, it will increase because of the demand component. Fine. So again, I'm just trying to position you and understand as an investor. Should I be looking in here? You're in the final throes of an advanced development of the project. The updated DFS out October. Project finance underway. You'd expect to get some sense of offers on the table and make a decision about that when?
I would think the end of this year or early next year, we should be able to. I would probably flag the number of offers on the table, and but once we mandate someone and probably sign a term sheet with a few conditions to be satisfied, then hopefully that daylights. I think investors in this space want to see some people with smart money having run the ruler over it say that, this is good enough for us from a risk point of view. And I think to some degree we've been able to achieve that with our cornerstone investor, the Arch Sustainable Resources Fund. They spent almost 18 months running the ruler over it. And I think one of the elements that we probably have omitted to talk about in terms of what financiers need to see is the ESG side of a company's approach, and feasibility studies and framework agreements is one side, but with them on board and the work we've been doing, so we recently got Chief Government Valuer sign-off for our relocation action plan. Other companies in Tanzania have been told, we guys think you should be doing your relocations more like evolution. We've got a real pat on the back in how we've approached that, obviously in accordance with IFC standards, and offering livelihood restoration and programs that will continue for a long period of time. You mentioned the war before. Tanzania has been a recipient of Ukrainian grain historically, and so we're putting in place programs to replace some of that grain, particularly for the local communities in our area. So we've really done all that stuff to a high standard. So I think, like I said, having a financier come in, I think will be a really big confidence boost that we are developing a project in the right way, and it is a high quality project.
No, I hear what you're saying, and all of that is good stuff, and in fact, it's essential, and you should be doing it. And companies like you should be doing that. But I want to come back to the how do I make money bit, which is right. So the timing is kind of, let's say Q1 on the project finance. Then what's the build period, and when does this thing get into production? What's that ramp up phase look like? Because there's a model out there which says, I'll just invest in companies, at exactly this point because it's near to revenue. I can see line of sight to revenue, and I know they've got the money to actually build this thing, and the margins sound good. So give me a sense of that runway, please.
Sure. Well, it's a 12-month build. So if we hit FID in Q1, it's a 12-month build, and then with a few months commissioning. So by mid-2024 is when you'd be starting to produce cash flow. This is one thing that if you're talking about making money on the share price, that purely viewing this as a mine, you could purely view this as a mine, and with the coarse flake graphite, will be a very high margin producer printing cash. We don't need prices to go up. We're past incentive levels for the sorts of prices we're going to get, but being able to release the economics of a downstream processing sort of feasibility study that might be north of $500 million NPV or those sorts of things. That's the potential value add, and I guess the sexy part that investors want to see is, hang on a sec, so you're not just selling concentrate to someone in China or someone in the US, and they're going to go and have all the fun turning that into the battery anode materials. We've got access to companies with the technology to go and do those things ourselves, and what you're then talking about is taking something out of the mine site, taking it all the way through to a finished product, and negotiating directly with Tesla or Volkswagen or CATL battery manufacturers. And I think we've got the funding to advance those studies as well. So it's not just the mine getting into production, the cash flows coming out of that. And that in itself, there's many mines like Syra's mine right now is not making money at the moment. That's the having 83% of their product is fine is sort of the issue there. But that wouldn't be the case with us. We could make money at the mine site standalone. The value add is pure cream, and that's a many multiples story, not just sort of incremental price growth.
I love it when CEOs actually talk about making money. It's very rare because it's essential for, but private companies couldn't work the same way that public companies can in that sense. So many companies come on here producing, but they're not actually making money. Okay, so you can make money because of the large flake, the coarse flakes rather that you've got. Great. I'm trying to capture value further downstream is a nice lofty ambition, but you've got to be able to deliver that. But baby steps first. You've got to get this thing up and producing and throwing off a bit of cash. Otherwise, we're talking about a ton of dilution down the line. So, can you? So we'll talk. Let's talk about that another time, okay? Because that is a nice blue sky conversation to have. Can we talk about thermal purification? Because one of your articles, you talk about doing some testing on producing battery anodes with a better process. Can you make sense of why do you feel the need to do that? Is it better margins or something, or is it just a green thing?
Yeah, so this is talking about downstream if we're going to talk about thermal purification. So this would be sort of that futuristic facility, whether it's in the US, Europe, wherever it may be, would be a facility that hopefully we've developed and owned, buying fine flake concentrate from the mine, and then turning it into coated spherical graphite from there. Now, the reason that we're pursuing thermal purification in that process is that the entire industry uses toxic hydrofluoric acid, which is terrible to handle and to dispose of. There are means, but it's nowhere near as environmentally friendly as using thermal purification, which, to describe what that is, it's basically heating up the graphite very hot. And so because graphite has such a high heat resistance, you're taking a 95% purity product up to more than 99.95, and I think we achieved 5 nines, which is incredible. So I think it's not just the sustainability angle as well. There are economic and other advantages of the flow sheet where we're looking to use that.
Okay. Okay, well, let's come back to that. So you're working on that now to slot into the kind of the blue sky opportunity of capturing value further downstream. Okay, interesting. Well, look, Phil, I think that's been a kind of good update from you. Busy, which is good news. Market seems to be flying at the moment. So look, stay in touch, especially when you get this updated DFS out. I want to see what that looks like, the economics look like. And again, it gives that sense of what, again, size of the prize and opportunity ahead of you.
Absolutely. No, I appreciate your time.